Every year, millions of people dive into the world of investing. And yet, most of them fail. They lose money, get frustrated, and walk away thinking, investing just isn't for me. But here's the truth. It's not the stock market that's the problem. It's the mistakes they're making along the way. If you're serious about building wealth, you need to know what these pitfalls are, and more importantly, how to avoid them. Because if you don't, well, you could be one of the 70% of investors who never see the financial freedom they dreamed of. So, what's the first big mistake? Stick around, because this one is costing people more than just money. Point 1. Lack of patience. The number one reason most people fail at investing is simple. They lack patience. Everyone's chasing quick wins. They want to double their money in a year, a month, or even a week. But here's a reality check. Real wealth is built slowly over time. Investing is a marathon, not a sprint. Think about it. When's the last time you planted a seed and expected it to grow into a tree overnight? Ridiculous, right? Yet, that's how most people approach investing. They want instant results, and when they don't get them, they panic and sell. It's like going to the gym once and being mad you don't have six-pack abs by the weekend. Relax, give it time. Here's the secret. Compounding takes time. The longer you stay invested, the more your money works for you. But if you keep jumping in and out of the market, you're going to miss the real magic. So, if you're impatient, investing will feel like a losing game. Stick around, because later, I'm going to show you a strategy to avoid this mistake. And it's simpler than you think. Point 2. Lack of knowledge. The second reason most people fail is because they invest without understanding what they're doing. They're putting their money into things they don't really understand. Stocks, crypto, NFTs, hoping for the best. It's like throwing darts blindfolded. Let me put it bluntly. If you don't know what you're investing in, you're gambling, not investing. And gambling rarely ends well. In fact, studies show that most retail investors underperform the market because they jump into hot tips without a solid understanding of what they're buying. The result? They panic when things go south, sell at a loss, and end up worse than they started. Remember the GameStop frenzy? People were buying without understanding the risks, hoping to get rich quick. And while some did, most didn't. How many GameStops do you think we'll see in the future? Probably a lot more. But if you're not informed, you'll just be caught in the hype, not the profit. So, the takeaway? Invest in what you know. Educate yourself. Take time to understand the market, the companies, the trends. Because an informed investor is a successful investor. Point 3. Emotional investing. Now, let's talk about emotions, because this is where most people fall apart. The third reason why most fail at investing is because they let their emotions take over. We're human. Fear and greed are natural. But here's the problem. When you let your emotions dictate your decisions, you're setting yourself up for failure. Fear makes you sell when the market is down. Greed makes you buy at the top, hoping it'll go higher. Sound familiar? The most successful investors are the ones who can stay calm in the storm. They don't panic when the market drops 10%, 20%, even 30%. They see it as an opportunity, not a catastrophe. But here's a question. How do you react when the market dips? Are you the type to check your portfolio every 15 minutes, sweating bullets over a 2% drop? If you are, you might want to take a deep breath, or, delete that app for a while. The solution: stick to your strategy, trust your process. The market is volatile, yes, but historically it always bounces back. Letting your emotions control your investing is a surefire way to fail. But emotional investing isn't the only trap. There's another, one that sneaks up on you slowly, without you even realizing. Point 4. Not diversifying. Trap number 4, not diversifying. Here's the thing. If you put all your eggs in one basket and that basket breaks, you're done. Yet, so many people do this when they invest. They put all their money into one stock, one sector, or one asset class, hoping it'll skyrocket. But here's the reality. No one can predict the future, not even the so-called experts. So, If you're relying on one investment to make or break your financial future, you're playing a dangerous game. Instead, diversify. Spread your investments across different assets, stocks, bonds, real estate, maybe even some alternative investments. It's like having a safety net. When one falls, the others keep you stable. It's not as exciting as putting all your chips on red, but it's a whole lot smarter. It's like betting on every horse in the race. Sure, you won't hit the jackpot, but you'll walk away with a win. And trust me, when it comes to your financial future, you want more wins than losses. Point 5. Lack of consistency. And finally, the fifth and perhaps most critical reason people fail. They lack consistency. Most people start with good intentions. They set up an investment account, make a few contributions, and then life gets in the way. They stop. But here's the truth. Consistency is key. It's not about making one big investment and getting rich overnight. It's about regularly investing, month after month, year after year, no matter what the market is doing. This is how you build true wealth. Think about it like working out. You don't go to the gym once and expect to be in shape for life. You go regularly. You build muscle over time. Investing works the same way. You don't want to be that person who sets up their investment account, then ghosts it for 3 years. Oh yeah, I'll get back to it. No, you won't. Set it, automate it, and forget it. But don't ignore it. Resolution. So there you have it. The 5 reasons most people fail at investing. And now you know how to avoid them. Lack of patience, lack of knowledge, emotional investing, not diversifying, and inconsistency. Each one of these can sabotage your journey to wealth. But if you avoid them, the financial freedom you're looking for is well within your reach. Now, if you're ready to take the next step and learn how to start investing, even with just $2,000, click on the video on your screen now. I'll walk you through how to get started, no matter where you are on your financial journey. Don't wait, because the longer you wait to start, the more you're leaving money on the table.